Oh, live. All right, how's everybody doing? This is Luciano Martinez, and I have a special guest today. We have Brittani Montalvo. She's a loan officer with Mortgage Pros. Um, just
Hi
real
there.
quick, hello. Wanted to do my first ever podcast for the audience, the public, for the people out there that have any questions about what it is to buy a home, sell a home. We brought Brittany in today for any questions you may have on what it is to get yourself pre-approved and what the process is. So I'll go ahead and let Brittany introduce herself real quickly. Go ahead, Brittany.
Hi there. My name's Brittani Montalvo. I'm with Mortgage Pros, like you said, loan officer with Mortgage Pros. And we have our office located on 10th and Dove here in McAllen. So any questions that you have or want to reach out, feel free. I think our information will be on the bottom here.
Yeah, we'll go ahead and present the information here shortly as we progress through the podcast, right? So, Brittany, tell me a little bit more about how you got started in real estate.
So, I mean, gotta take you back. I started off first in education. I was in education for 13 years. In the last few years, in education, I was just feeling the need for change, feeling like there was something else out there for me. And I knew that I still wanted it to be in an industry where I would help people. I mean, you were in education as well, so I'm sure you're familiar with the interest inventories. Well, my interest pattern was helping others. So, I mean, I knew that that's where I needed to be. And basically, a buddy of mine mentioned that, I should really look deeply into lending. And so I did that. And I, realized in my research that, hey, I really think that this is a great opportunity for me to, use my abilities to help others, and just be a driving force for those who are looking to get into a home. And so I did. I just had that overwhelming desire to proceed with it. I did. I've been in the business now for 3 years, and I've enjoyed every minute of it, all of the learning curves and everything. And it's truly a rewarding industry and something that I've been very blessed to
Yeah.
end up doing.
That's really awesome, and just so that people know, yes, we both were educators. I just gave up teaching here a while back here in May, and I know you gave up teaching immediately, right?
Yes, I did.
Yeah.
Yeah.
So as soon as you got into the industry, you gave up teaching. You
Mhm.
hit it hard, 100 miles an hour, right?
Right
Yeah.
into
It
it.
took me a little. It took me a little bit longer to go ahead and do that, but now that I've done it, I've definitely enjoyed doing it as well. Where I'm doing it full time, helping people at all hours of the day. So it's not just from
Mhm.
5 p.m. onwards. It's at all hours of the day. Yeah.
Exactly.
So what in specific? What would you say your specific expertise in lending is?
So I would say really it's being educated in different programs. I mean, there's so many different programs out there for borrowers that they're not necessarily aware of. So I really pride myself in educating myself, making sure that I'm doing research and staying on top of all of the new programs that are coming out. There's down payment assistance programs out there that can truly be helpful to clients. And so, I mean, that can help them drop their rate. That could help, drop their overall closing costs and whatnot. So, I mean, just making sure that I'm familiar with the different loan programs that can help buyers, get into a home where they may not have been able to before.
Speaking of being able to get into your home, what is a good credit rating or something that people can say, okay, I'm able to get myself into a home. Sometimes people, I got buyers that, oh, my credit's not very good. It's in the low
Mhm.
600s. Is that something that works for people?
So we get that a lot, actually. A lot of people, shy away from applying or even reaching out because they feel like their credit isn't going to get them approved. But you'd be surprised. I mean, there's loan programs where you could go as low as a 580 for credit score. And so there are possibilities. I mean, and then once we pull credit, I mean, we basically just take a look at where you're at and see, you know, if there are certain things that we can do to get you where you want to be. So, but I mean, you don't have to have perfect credit to get a home. You know, that's a myth that's out there. And, you know, I wish that so many people would realize that that's not the case. Like you can get into a home even if you feel like your credit, you know, maybe isn't the best. And if it's 600, hey, like I said, 580 is the minimum.
Got you. Yeah. So speaking of myths, I have another myth buster right here. Do you need 20% down payment?
You do not need 20% down.
I
We've
think a lot
got
of us actually know that
programs
already.
that, yeah,
A
we've
lot of
got
people already.
programs that are 0% down. You've got 3%, 3.5%. So it's really going to depend on the loan program. It's going to depend on, you know, the buyer's overall loan profile. So no, that's a big, big myth. You do not need 20% down. And again, like I said, there's down payment assistance programs out there as well. So, I mean, we can look into that and try and get you in with nothing down, you know?
That's great. I know that that's a question that always arises. Hey, do I need the 20% down payment? You know,
Yes.
maybe in particular programs, you know, maybe you're going with an investment opportunity. Maybe that's the case, but you know,
Right.
if you're trying to get yourself into a home, that's not the case at all times, right? Brittany, I have another question for you. How would you describe the current market? You know, is it flowing? Is it not flowing? What is your take on the current market as a loan officer? You know, are you seeing a lot of people wanting to go ahead and buy? Are you seeing people slowing down the buying process? What is your take? What is your feedback on that?
So overall this year, I would say that, of course, it slowed down. I mean, the market has had its ups and downs. You know, in the beginning of the year, we were, you know, expecting to see rates decrease, and instead they're increasing. So obviously, you know, home buyers are a little reluctant to move forward. You know, I think a lot of people are waiting for rates to decline. Um, so I mean, yeah, we're seeing higher rates, we're seeing higher prices, but at the end of the day, people are still buying. I'm just seeing that they're taking their time to buy. I'm seeing that people are needing a lot more information. They're asking the right questions, and they're really trying to get all the information they can before they move forward on that
Yeah.
home purchase. But I'm definitely seeing the market, you know, it's slowed down, of course, compared to 3 years ago when it was crazy.
You know, but you said something where that hit me, it hits home to me. You know, I don't purchase anything just right on the spot. Like if I'm gonna go buy a product at Best Buy, I take about 2 to 3, 4 different months just to, you know, if it's a webcam, I'm gonna take 2, 3, 4 months before I purchase that webcam.
Yeah,
And you know, I think a lot of people are doing that more today than they were, you know,
absolutely.
2 or 3 years ago because you got to do your research. You are
Absolutely.
is it the right time for me? Is it not the right time for me? As much as we want to sell, you know, you're
Yeah.
doing what's best for your client, right? So
Absolutely.
I
And that's
totally,
one of the biggest things, you
huh?
know, I think that's one of the biggest things I think is just informing them. You know, I always tell my clients, and I know you're the same, like, I want to give you all the tools you need to be able to make an informed decision as to how you want to move forward. So at
Yeah,
the end of the day, I'm not trying to just push you into a house. At the end of the day, it's my job to educate you so that you feel confident in moving forward with that home purchase. You know,
true
a lot of
story.
times I get people that are like, well, I don't even know, you know, what my monthly payment would be, what closing costs look like. That's a part of my job. You
Yeah.
know, that's what we do. So don't, you know, once you come in, you apply and everything. Those are all of the things that we're going to look at. And I'm just seeing a lot more really, really good questions being asked by buyers, which is really refreshing, actually.
Yeah. Most definitely. All right. So you know, we're talking about bringing in buyers. We're talking about, you know, the slowing down of the market. Can you talk to us a little bit about what is the process for getting a buyer that pre-approved? You know, what is the mortgage process, if you will?
For sure. So, you know, you reach out to me. We have a in-depth conversation, you know, just about your overall profile, basically. We discuss employment, you know, income, assets, basically, you know, all the things that would be asked on the application, but just so that I could get a little bit more in-depth information from you. Within that, you would complete an application first and foremost. With that application, I'm able to run credit, and then at that point, I'm utilizing information that you've provided, right? So at that point, I'll have a general idea of how it looks. At least I'll know, well, credit looks good, and what they've put in here looks good, but I'm going to need documentation. So I have to verify, that everything listed in the application is correct, So there's the standard documents that we would require, which would be, just a copy of driver's license, social, your most current pay stubs covering 30 days, the last 2 years of W-2s or 1099s or tax returns, and then your bank statements. Showing, the funds you do have available for closing. And that, again, don't shy away just because you feel like, you don't have the funds that you think you need for closing. Again, there's programs out there, there's things out there that we can look at using to be able to help with the closing costs as well.
That being said, I've heard of scenarios or situations where a buyer has multiple bank accounts. What do you tell a buyer then?
So at that point, it's really just a matter of what bank account they're going to be using for their closing funds. So like if all of their assets are in their savings and that's going to be enough, to cover the closing costs, then that's really all we need,
So you just need one bank statement or just one bank account. You don't need like all 3 or 4 different bank accounts.
No, not necessarily. Unless we're going to be using, assets from all, 3 or 4 bank accounts, then yes. Because at that point, we need to verify everything up front, because when it hits underwriting, the underwriter's going to review those statements as well. So we want to make sure to review them ahead of time.
True story. No, I understand. Yeah. And the reason I asked is because a while back, I ran into that situation with a buyer. The buyer was, depositing money into an account and not knowing, and I guess it was maybe my fault, or the buyer didn't know that they weren't supposed to be putting money into the account without being able to trace it. So that's the fact. And I guess you guys will go ahead and cover that as you guys progress through the process. But moving forward, I got a couple more questions to ask you. One of the big questions that I have is, what is the difference between a pre-approval and a pre-qualification, or are they the same thing?
Love that you asked that question. They're totally not the same thing. Pre-qual is basically like what I said in the beginning. You complete an application just based off of giving me, your information. I've possibly run credit in some instances. Sometimes that doesn't happen, but going based off of information, that the borrower has provided without verifying it. We do not do pre-qualifications. So at this point, you're getting a mortgage loan. It's one of the biggest purchases of your life. They're very difficult to get approved for. And so at the end of the day, we have to take the necessary steps to actually give you a true pre-approval, which would be completing that application, running your credit, verifying all the information on the application is correct through those documents that I discussed earlier. And then also, employment verification as well. You have a lot of these guys that are in the oil industry, and so they'll go from job to job. Once one job is finished and the next one picks up, it's very important for us to get those employment verifications so that we can, calculate income correctly. So there's a lot that goes on in the front end, before pre-approvals are even issued. And so that's a big, I want to say, myth as well, is that, people think that it can be easy too, or that it's, well, I completed the application and that's it. And, if you want a true pre-approval and you want to feel confident about putting in your offer, then, we definitely have to make sure we go through all the steps. And so I like to talk to my clients about that up front so that they can set their expectations and know, what the time frame looks like.
And I'll go ahead and interject here, and this would be my opinion completely, because I know some people don't care where people get their pre-approvals from, but I care where I get my pre-approvals from, because if I'm gonna go reach out to a big corporate bank, it's really really hard to speak to these people. And one of the things I've appreciated about working with you is if I call you at 6-7 in the afternoon, you make yourself available for not just me but our buyers as well. And so that's something that I appreciate. And my full blown opinion is to go with with a local lender versus a big corporate company. But again, that's totally up to the buyer. The buyer will get to make the decision as to what they decide to use. But personal opinion, professional opinion, I like to use you as a local lender. You know what I mean?
Yeah.
So,
and I tend to agree with your opinion. Of course.
Of course, right? Yeah, no, hey, we help each other out, right? So but no, I just like, for me, if I have a question and I've called you multiple times, at 7 o'clock, at 8 o'clock. I think I've even called you like at 8:30 at one point or something to that effect, where hey, Brittani, I have a question. You help me out. And I think buyers feel the same way. They need to reach out because a lot of times we're negotiating out here, at 8, 9, 10 o'clock. Hey, Mr. Buyer, what do you think about this? And at the same time, they may have questions to ask and reach out to you, and you make yourself available. Local lenders make themselves available for that reason. And then I feel like corporate banks, just have a hard time to do that. I know one time I was dealing with the Chase Bank, and my buyer accidentally put McAllen MX, and that threw the whole deal out the window because the underwriter at Chase Bank was was very adamant about that being like a red flag. So I don't really like working with big corporate banks like that. But again, it's up to the buyer. The buyer makes the decision, right? Yeah. Brittani, moving forward, I know we were gonna make this about a 20-minute segment, but we're already at our 16 minutes here. Time flew, right? So, anyways, moving forward with my next question here, right?
Go for it.
So, I was gonna ask you. I know that you work in the state of Texas, right? And correct me if I'm wrong, but Mortgage Pros is all over, right? Like, not just
so I mean, we're here locally. Our corporate office is in San Antonio, but I mean, we can process loans anywhere in Texas. So I mean, we work all over, really.
Have you done, like, does Mortgage Pros also do deals out of the state?
So some of our loan officers do, but you have to be licensed in the states that you're, closing the deal in. So for me, I am licensed in Texas. So, I'm only originating loans in Texas.
So one of the times that we talked, you mentioned that you do some deals in the Houston area, right? How does that compare? How does the Houston market compare to our local market? Like, can you tell me a little bit about the differences there, or is it very similar? Is it fast paced over there, slower paced here? What is it? Can you compare and contrast, if you will?
Yeah.
Is it possible?
So with the Houston area, what I'll say is, obviously, aside from prices, right? Because I mean, that's a big city. Is that you do see a difference in the sellers. So seller concessions are more of a thing there, is what I'm seeing. Although we're seeing them here in the Valley as well. I feel like, the sellers are more willing in that area
to like provide seller concessions?
Not necessarily just give out the seller concessions, but just more willing to negotiate the seller concessions. And then I would say, yes, it is a little bit more fast paced. I mean, but aside from that, one of the things too that I feel like is a big difference is property taxes. So you would think in a larger city that their property taxes would be so much higher, and you'd be surprised to know that in certain areas in Houston, their property taxes are actually lower than certain areas here. And I say that to say that property taxes and your homeowner's insurance put together are, a major part of your monthly payment. And so I see a lot that monthly payment is where most borrowers are concerned. And so that's something that, is really looked at as far as keeping the payment down. Well, what area do I need to look in? What tax rate, do I need to be within? That's one. Also, homeowners insurance as well. Being over there so close to the coast, the closer you get, the more expensive it may be, both for Houston and the Valley, So, I mean, when you're looking at, somewhere near the island as well, um, same thing in rural areas, whether it be, outside Houston or over here as well. If you're further away from police stations, fire departments, things like
Right.
that,
Right.
that affects it as well. So I mean, but for the main part, it's still the same process, both on lending side and real estate side. It's just
Mhm.
a little maybe faster pace.
Yeah, no, for sure. So,
Mhm.
recently you and I were talking about a particular buyer, with the interest of purchasing a fourplex.
Mhm.
Now, in the near future, you have this Fannie Mae 5% conventional
Yeah.
loan coming in. One of the things that I can tell you that I told the buyer was two and a half years ago, 3 years ago, where interest rates were very, very low. They were in
Right.
the what is it, high twos, low threes. We had a buyer purchase a property for $275,000,
Mhm.
and this particular buyer bought the property at an FHA 3.5% down payment, and it passed that self-sufficiency test that we talked about the other day. Um, that being said, is I ran an analysis on it, and it turns out that that particular FHA 3.5% down payment with the high interest rate, that same particular deal, and I was telling our mutual client that, hey, that particular deal with today's interest rates would put him in the red. Can you
Yeah.
tell us a little bit more about how what the advantages of this 5% conventional loan is going to be and how it's going to help potential investors?
Yeah. So for one, the original loan program that you were looking at was the FHA 3.5% down,
Mhm.
owner occupied. So you had to occupy one of the units, and the other three could be rented out. Now with that one, there's a self-sufficiency test that you would have to meet. And so essentially all of the rents would have to cover the monthly payment. And out of all the rents that you get, we're only able to use 75% of that. So yes, before, not a problem, nowadays it's becoming a little tougher.
Yeah,
And so
it
that's
is.
definitely an area that we're having issues with, right? So the good thing about this new 5% down, it's conventional, also owner occupied. So you do have to live in one of the units, but there's no self-sufficiency. So although there is no self-sufficiency, so we're not going to hit that hard stop with underwriting,
Mhm.
still as the buyer, we'd want to make sure that we go over everything, that we know, what the rent analysis looks like, we know what your monthly payment looks like, closing costs, all of that stuff, so that you can determine, if it's something that's going to be beneficial for you.
Right.
Obviously, most of these people, although they're occupying one unit, also see it as an investment opportunity, of course, to an extent.
Mhm.
So at the end of the day, we just have to analyze the whole situation, and really rent is going to play a major role in that as well. How much of those rents, if you're living in one unit, is going to cover your monthly payment. And
Right.
in most cases, you have buyers that are looking, I mean, if they're looking to occupy one of the units, obviously it's either that, or I'm assuming they would purchase a home. And
Right.
so they know they're going to have a monthly mortgage payment anyways, but you also have people on the other side of things that they don't want to pay, anything towards the monthly payment. They want it to be covered, within the rental income. So I mean, it's really going to be dependent upon the buyer and what their choice would be, what they're
Yeah.
looking to get out of it, I guess you could say.
Totally, 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 totally. So, do you have any other potential advice here for our potential buyers or our listeners out there that, before we go ahead and close up this podcast, right? Do you have any other potential advice that you might want to go ahead and offer up to any buyers or even sellers? I know some people might be sellers and thinking about selling their home. Do you have any advice for them moving forward in today's market? Beyond as our closing remarks.
Yeah. So be realistic, educate yourself, whether it be you do some research on your own or just making sure you're asking the right question, or not even the right questions, but asking questions to your loan officer, ensuring that they know that, hey, I need to be sure to inform them. Be upfront, when you're completing your loan application. Last thing you want to do is, on the application, it asks you if you own a property or anything like that. We ask you if you own a property or anything, you say no. And then it comes out in processing or underwriting later after you've gone under contract that, oh, in fact, he does. And so any property that you do own, I mean, we're going to have to list those liabilities within your debt to income ratio. So, I mean, it could very well kill the deal.
Yeah.
And
I always
then
tell my buyers, be super honest. Don't lie to me.
yeah, be super honest. I mean, we can help navigate, as long as we know what we're up against.
Yeah, for sure.
And for the sellers, I would say honestly, like,
Give me a call.
yeah, give us a call, 'cause
Give me a call. We'll help you sell your property. No,
yeah.
go ahead. What were you gonna say though?
But also just don't be afraid of the possibility of giving seller concessions. There's a lot of buyers out there that are just really hesitant to purchase because of what their monthly payment is looking like. They're pre-approved, they're ready to go, but they just get so nervous, about the monthly payment.
Yeah.
And seller concessions aren't only used to help with your closing costs, but they can also be used to help the buyer buy down their rate. And boy, if they can buy down their rate, it can really help bring their monthly payment down. And that can then, help them move along with actually moving forward with an offer on the house.
I love that. I love that. We didn't talk about that earlier, but yes, seller concessions can definitely help you out with them buying down the interest rates, right?
Yeah.
All right. Well, this puts an end to our podcast for the day. Brittani, I want to thank you so much for being here. I know it's time out of your busy day, right? So thank you for being out here. Thank you for coming. For anybody that has any questions on what it is, the mortgage process, please give Brittani a call. Her number is down here on the little ticker going across. Her number is 409-739-5638. You have any questions about buying and or selling, you can go ahead and reach me at 956-862-1556. Our office, and I didn't go ahead and disclose that earlier, but our office is located in 1200 Auburn Avenue, Suite 285 here in McAllen, Texas. If you have any questions, reach out to us. If you have any comments or questions, you could go ahead and leave a comment, and we'll go ahead and answer them later on as we progress throughout the time. We didn't leave too much of a time for leaving comments below, but go ahead and leave a comment below if you have any questions after you've watched this video. And if you have any questions, we'll reach out to you, either me, myself, or Brittani. I know we're able to respond to any of those comments. So again, Luciana Martinez and Brittani Montalvo. She's with Mortgage Pros. If you have any questions, feel free to reach out. All right.
Thank you for having me, sir.
Of course.